Hello everybody, and thank you very much for joining today's webcast. Gain control of your journal entries, effective techniques for optimizing manual journal entries in SAP. This is a continuing webcast in our SAP GRC series that we've now been running for over a year, and thank you everybody for supporting that, and welcome anybody who's here for the first time. My name is Jamie Draper. I've been running these webcasts since the start. I'm a partner out of PwC's office in San Francisco, specializing in SAP security and controls. I'm joined today by Jill Pavlus and David Light. I'll give a little bit more of an introduction to both Jill and David just before we start the details of the presentation. Before we get into that, for those of you who've been on the webcast before, there's a number of disclaimers that I need to go through, particularly important to those of you out there who are from our external audit clients. So the first disclaimer, certain matters reviewed today may represent services that PwC may be prohibited from providing to our audit clients. In those instances, the information is being provided to inform you of options that you may want to consider as you evaluate the solution described on today's webcast. Independence rules are complex, and we recommend to discuss all services with you in advance within the context of the independence rules. The information contained in this document is provided as is for general guidance on matters of interest only. PricewaterhouseCoopers is not herein engaged in rendering legal, accounting, tax, or other professional advice and services. Before making any decision or taking any action, you should consult a competent professional advisor. Okay, moving on to the administrative matters that relate to the webcast today. Some general ones to start with. For better viewing experience, close all applications. For better sound, use headphones. To enlarge the slides, click on the bottom right corner of the slide window and drag to the desired size, or click the green Maximize button at the top right of the slide window. A question we get asked on all webcasts: are the slides available for today's webcast? Absolutely they are. To download the slides, click on the Resources widget at the bottom of the screen, and you should be able to download from there. The next thing that's very important, I really do encourage everybody out there to submit questions as we go through. We will be answering those questions to the extent that we can on the webcast. Any that we don't get to on the webcast, we will answer after the webcast. So we will answer every question that is submitted during today's webcast. And last, if you experience any technical difficulties during the session, this is for the polling questions, which we'll cover on the next slide. Reply to the question in the QA window and include the poll number. This is to enable you to get the CPE credits, and I will remind you of that when we get there. So on the topic of CPE credits, in order to receive the CPE credit for today's program, you must stay on for the entire 60 minutes. You have to respond to the polling questions, and just to link back to that last point on the previous slide, if for some reason you can't use the technology, just submit the answer in the Q&A session. At the end, you need to click the CPE widget at the bottom and then follow the prompts to make sure that you download your certificate, and you should be able to get your certificate there. And the last point, CPE cannot be awarded for participants that are not logged on to the webcast. So unfortunately, this is not available. CPE is not available for anybody who is attending on as a replay. Okay, so moving on to the detail of the webcast today. As I mentioned up front, I'm joined by both Jill and David. Jill and David, I'm very excited to have, because Jill and David, I work very closely with both of them. They're both based out of the Houston office. Jill is a director out of Houston, and Jill leads our SAP energy practice, the energy sector from Houston with regards to controls. And so Jill has a significant amount of experience in the record to report space, and has a huge amount of experience with journal entries. And so very excited to have Jill today doing this webcast. David works with Jill and myself out of Houston as well. David is a manager. He has 6 years of experience, very, very strong with SAP's financial module. And David has done a lot of training with SAP, including trainings around how to control journal entries. So looking forward to today's webcast. We have a lot of people joined, and this appears to be a very hot topic that's on everybody's plate now. And with that, I will hand over to Jill to go through the agenda.
Great. Thanks, Jamie. On the screen, you'll see our agenda for today. We'll talk through why manual journal entries are such an important focus area, the risks associated with create and post access, and tips for identifying a population of manual journal entries in SAP. Then we'll step through some possible control solutions around manual journal entries, including the use of park and post with SAP's workflow functionality. We'll end with a discussion around ways to leverage GRC in a manual journal entry process, as well as go over some effective continuous monitoring solutions we've seen, before we wrap up with a few key takeaways. Before we get into the meat of the content, we wanted to start with a polling question.
Thanks, Jill. So today's first question, what audit issues, internal or external, has your company encountered related to manual journal entries? 1, insufficient manual journal entry control design. 2, inappropriate users with the ability to post journal entries. 3, incomplete manual journal entry populations utilized in control operations. 4, all of the above. Or 5, none of the above. Again, as I mentioned before, if you're unable to answer for any technical reasons, if you just submit your answer through the Q&A chat, we can award your CPEs afterwards. We do have to leave the polling questions on the screen for a minute to allow everybody enough time to answer them. So whilst that's going, we typically sort of answer any questions that we've got come in. One of the questions that obviously hasn't come in during this session so far, but one of the questions we're getting asked all the time by clients, both our audit clients and our non-audit clients that we're servicing, is how much are you hearing from the auditors that's being pushed from the PCAOB on journal entries? So, Jill, if you want to touch on that one before we get into the detail, that'd be great.
Sure. I definitely think that journal entries is an area where we continue to see focus, both through PCAOB inspection findings as well as some enhanced guidance coming out from the audit firms. And so it is fair to say that this is on the top of the list in terms of focus areas from an audit perspective, and really a couple key themes there. The first is around how companies are determining what their true population of manual journal entries are and how those are being subjected to the company's control, as well as the segregation between the ability to create and post journal entries. Both topics will be focus areas that we'll cover in the content today.
Okay, thanks, Jill. So with that, we'll take a look at this first poll result. I think the majority of people are struggling with all the issues surrounding journal entries, and I don't find that surprising. I actually do find a little bit more surprising that the amount of people that are specifying none of the above that aren't, but good luck to anyone who isn't struggling with challenges from journal entries. So, Jill, I don't know if you had any comments on this before we move on.
No, let's move on, Jamie. Great. So let's start by discussing first why manual journal entries are such an important focus area. First off, they are inherently higher risk due to their manual nature, and that's because a manual journal entry can easily be used to manipulate the financials. In the absence of strong controls, employees may use manual journal entries to conceal fraudulent activity, potentially causing an organization to suffer some type of loss. There are also standards in place, such as the AICPA's SAS 99 consideration of fraud in a financial statement audit, and that standard requires auditors to perform testing related to the appropriateness of journal entries. Also, for those of you out there who are subject to Sarbanes-Oxley standards, we know that SOX requires management, as well as their auditors, to assert to their internal controls over financial reporting processes. This would include the process used to initiate, authorize, record, and process journal entries. If we could move on to the next slide. Professional auditing standards require auditors to obtain an understanding of the design of controls over journal entries. While there are many aspects to this understanding listed on the slide in front of you, we'll focus on a few areas in today's session. First, auditors must understand a company's procedures related to recording journal entries. So as I mentioned before, This includes how journal entries are initiated, authorized, recorded, and processed. Some key focus questions that we would expect to see around this are, is there supporting documentation required to book journal entries? Is the entry prepared outside the system before it's booked? How are journal entries approved? Is it in line with the delegation of authorities or some other manual approval? Are they approved outside the system or within? And what does the approver review in order to get comfortable with the journal entry under review? The next focus area really relates to the population of journal entries, and it's safe to say that this is certainly a focus area that we're seeing some increased scrutiny around. Companies should have controls in place to determine the complete population of both standard and non-standard entries. Specifically in SAP environments, this can oftentimes be a complex process, and today we'll focus on some tips for identifying those populations in SAP. Along with this, it's also important for a company to demonstrate that all journal entries are subject to appropriate review and approval controls. Again, given the many ways a journal entry can be entered into SAP, which we'll touch on a bit later, this can also be a complex area that requires a focused effort. We'll also spend some time talking next about create and post and what that really means, as well as other access restrictions related to journal entries. In environments where some of these access risks exist, it's important for companies to have a process in place to determine that there is appropriate segregation between the users who post journal entries versus those that operate other key financial reporting controls. Examples of that may be a reconciliation or another direct entity level control. Now, let's move on to the next slide and talk a bit about create and post. First, let's start with the definition. Create and post is the ability of an individual to both create and post a journal entry in the system without intervention of approval or review. So said another way, an individual can unilaterally post entries in SAP without detection or intervention systematically by others. Many companies currently using SAP actually have this risk of create and post in their environment where workflow may have not yet been enabled to enforce that segregation between create and post. When this risk of create and post exists, a company should evaluate users with this access to make sure that those are the folks that we would expect to see that have that access to both create and post a journal entry, as well as evaluate the effectiveness of back-end mitigating controls in place to mitigate the risk, again, of a user being able to unilaterally create and post an entry in the system. To recap a point that we just went over from the prior slide, it's important to ensure that users who have the ability to create and post also don't operate the mitigating controls. So if, for example, we have a back-end mitigating control that says at the end of the month we pull our manual journal entries and review them for appropriateness, we would want to make sure that the operator of that control wasn't an individual who also had the ability to create and post, as that particular situation wouldn't mitigate the risk of management override. Next, we're going to get into the identification of manual journal entries in SAP, and David's going to step us through that. David?
Thanks, Jill. So we know why journal entries are important. Now we're going to talk about what the real definition of a manual journal entry in SAP is, and some elements and considerations in identifying the population of manual journals within SAP. So a manual journal entry is an accounting document that's posted into FIGL with a transaction code that allows an end user to manually input the debit and credit line items of an entry. So what we're saying is that an end user can pull up a transaction code in SAP and they can actually pick the GL account and they can pick the dollar amount of the journal and the posting that they want to make. That's really what a manual journal entry is and what we want to try and identify within SAP. So all transactional data for accounting documents is stored within FI posting tables in SAP. This would include all your manual journal entries as well as automated entries and other entries that hit the GL. So the two tables where this information is stored and kind of our starting point for a population of manual journal entries are BKPF and BSEG. Those are just two technical table names where the data is stored. BKPF is going to be the header data of an accounting document, so that's going to be information that applies to the entire document. So it'll be username, the date, the transaction code that was used, the document type that was used, and other data that's going to apply to that entire document and every line item of that document. BSEG is going to be the line item table. So this is where you'll see information like GL account, dollar amount, the debit and credit keys, and other information that's specific to every line item of that journal. So these tables contain all the information that we need for all accounting documents that then we can use to identify where our manual journal entry population is. Unfortunately, there's no one checkbox in SAP to identify a manual journal, and due to complexities of SAP, there are multiple transaction codes and document types which allow a manual posting. So an end user can use an array of transaction codes and document types when they are posting a manual journal. For that reason, there's some careful consideration that needs to be taken when you're trying to identify a manual journal entry in SAP. To help simplify the process and kind of provide a little bit of guidance, we've identified 5 key elements that can be considered to identify a population of manual journal entries in SAP, using the tables BKPF and BSEG as the starting point. Now, a common misconception in SAP is that there's only a few T codes, transaction codes, that can be used to book a manual journal and document types. Example, FB01 and FB50. These are 2 transaction codes that are very commonly used when booking a manual journal entry, and document type SA is a very common document type that's used to book a manual journal entry. And while these combinations are commonly used and may be defined as the transaction codes or documents to be used at your company, there are many other transaction codes and document types that could be used to post a manual journal entry into the GL if somebody wanted to. So that's something we'll have to take into consideration as we step through the elements. So as I mentioned on the previous slide, we're starting with BKPF and BSEG, and all the accounting documents are posted in there. And to get from that overall population to a population of manual journal entries, we have these 5 elements to help reduce the number and hone in on that manual journal entry population. So we're just going to step through each of these and provide a little bit of context about what they are. The first is the business transaction field, and this is a field that sits in the BKPF table, which is that accounting document header table, and this tells us, really subdivides data into transactions according to business views, is the SAP kind of definition. And what that means is that when this field is populated with the indicator of RFBU, which is just a technical name in SAP, we know that that entry originated in FI. So for a manual journal entry, we know that they have to originate in FI. They can't originate in SD or MM or other modules of SAP. If a user wants to post a manual journal entry, it's going to be in FI. So by applying this element and looking at in BKPF at documents that have an indicator of RFBU in this business transaction field, we can start to identify what our potential manual journal entry population is. And we can really then exclude any documents that have this field populated with something other than RFBU. So as we step through these elements, you'll see that you can start to make exclusions after you do some considerations to arrive at the manual journal entry population. After business transaction, we'll look at transaction code as another common element. So this sits in BKPF as well, as it's the transaction code that was used to book the accounting document. In SAP, there are more than 60 standard transaction codes that you can use to manually input the debit and credit, the GL account, and post a manual journal entry. So we have to consider all of these 60-plus standard transaction codes when we're trying to identify a manual journal entry in our environment. At your company, there may be other custom transaction codes that have been developed and provisioned to users that provide the same functionality, so you'll need to consider those as well. Once some work has been done to identify all of these, you can exclude anything that is posted with a transaction code other than the 60-plus standard transaction codes and the custom transaction codes that exist in the environment. So it can be the second exclusion, if you will, from the total accounting document population to arrive at the manual journal entry population. The third element is document type, and the configuration for document type sits in table T003. Again, that's just the technical name of the table. And with document types, you can configure batch input only as an indicator and mark the document type as batch input only. And what that means is if a document type is batch input only, an actual user sitting at their computer will not be able to post an entry, a manual journal entry, into the GL with that document type. It'll be restricted and will only be allowed for batch input, which would be by an ID in the system or an internal process or an interface potentially. So we can exclude document types that have the indicator set of batch input only. Also in the document type configuration, there's an account type setup. So a document type has to be set up with account type S for GL account to allow a posting to the GL. So if a document type does not have S set up as an account type, then it cannot be used to post a manual journal entry. So we could exclude those document types as well from our population. It has to have the S to allow posting, so if it doesn't have the S, then we can exclude it from the population. So that's the third element. And moving on to the fourth is user ID. So user ID information sits in table USR02, the technical name of the table. And user IDs denoted as B, which are system users, or C is communication, cannot actually be logged onto by an end user at their terminal. So these IDs, therefore, cannot be used to post a manual journal entry because a user can't log onto them. They cannot then post a journal entry which they would pick a debit and credit and GL accounts for. So we can then exclude type B and C from our population to arrive at manual journal entries. Now note there may be some cases in environments where there are journal upload programs or other things written that use these IDs, and you need to place some consideration on that. If there's an upload program using a type B ID, we may need to leave that in the manual journal entry population and not exclude that user ID. But after some consideration and looking into the user IDs is done, you can potentially exclude user types B and C from the population to arrive at the manual journal entry population. And you'll note that as we go through the elements, some documents will be excluded by one or many of these elements and will already be excluded. So moving on to the fifth element, and the last one that we have here is GL account. So GL account master data sits, the configuration that we're looking at sits in SKB1, the company code level. And GL accounts can be denoted as reconciliation accounts or post-automatic only. And that means that they cannot accept a manual journal entry posting. So if an end user picks these GL accounts in a manual journal entry and tries to post to them, the journal will not be posted. So if a GL account is flagged as a reconciliation account or post-automatic only, then we can exclude those line items from our manual journal entry population as well. Something to note here is that these are point-in-time settings that we really need to be continually evaluating and looking at. The GL account configuration or master data settings could change. The user type on an ID could change throughout the period. And you really have to evaluate, were these settings the same for the entire period before you can exclude anything from your manual journal entry population. And we'll talk more later about how to potentially monitor some of these settings so that you could be notified on a real-time basis when changes do occur. And I think with that, we'll pause for another CPE question. Jamie?
Yep. So thank you very much, David. The next CPE question, what tool does your company use to monitor users with the ability to post accounting documents in SAP? 1, SAP GRC. 2, SAP Transaction SWIM, S-U-I-M. 3, other security tools. 4, users with this ability are not monitored. So whilst we wait for that to be answered, a couple of questions coming. Actually, there's a lot of questions come in, so thank you very much for that. There's a number of questions that are very specific to individual companies' circumstances. They're great. We will answer those, but I think I'm going to try and avoid those on the webcast and stick to sort of more general questions. One easy one came in. Again, I covered this at the beginning, but there was a question on how to download the slides. There's a resources widget on the bottom of the screen that if you click on, you should be able to download the slides. And then a couple of questions that are sort of more clarifying questions that I think would be helpful. Jill, I'll shoot this one over to you. The question, if workflow is not set up in the client's environment, technically all users with posting abilities have the ability to park and post, and just wanting to know whether that's correct.
Yes, Jamie, that is a correct statement. And so a user could still park a document in SAP, but that same park document could be modified prior to posting. So, in fact, all users who are provisioned the ability to post accounting documents in an environment can both create, or in SAP terms, park and post a document. If we do go the route of implementing workflow, provided we get the configuration and security settings right, that then does systematically enforce the difference between parking and posting or creating and posting a document in SAP.
Okay, thanks. And another question being asked, is there a standard report that shows all the manual journal entries that have been created and posted in a period, and who did them, which is an important point to that?
Sure. So there is a standard program in SAP that queries on the BKPF and BSEG FI posting tables that David just walked us briefly through. The kicker with that particular program is that you have to tell SAP the parameters that you want to pull it on, whether that's transaction codes, document types, users, etc. And so David's going to dig in over the next few slides into those various elements, but that report does query off of the base tables in SAP. You just have to know what to ask SAP to return. Otherwise, it's going to return all the data in the table, some of which wouldn't be manual journal entries, as well as put some strain on the system in terms of the amount of data that's contained within those tables.
How to make friends with your IT department by clogging up the system with a report. So the poll questions, or the answers to the poll, the majority of people are using SAP GRC, and then a number of people are using other security tools. So it does look like most companies are at least monitoring through one form or another the ability to post accounting documents in SAP. So, Jill or David, did you have anything else, or should we move on?
Let's move on. Okay, so now we've talked through the 5 elements. Overall, over the next few slides, we'll dig in a little bit and have some SAP screenshots to show where some of this configuration and settings that I walked through really sits within SAP. So the first is the business transaction field. This sits, again, in table BKPF, which is where the header data for accounting documents sits. And in the screenshot, you can see we have it highlighted with the box. There's the business transaction field, and for all the documents in this example, RFBU is populated. So based on that, these are potential manual journal entries because they are tagged with RFBU, which means they originated in FI. So we would need to consider these further. Moving on to the next slide, this is transaction code. So transaction codes here shown on the left is FB01 and on the right is FBB1. On the left, FB01 is a common transaction code that is utilized to book manual journal entries. You'll notice at the bottom with the red box, there's the posting key in the account where you can enter that, and then on following screens you can enter amounts and other line items if you want to post that journal entry. On the right is FBB1, which is post foreign currency valuation, a common program that's used for foreign currency reevaluation at period end. You'll notice at the bottom we have the red box again, and the same settings are there for posting key and account, and on following screens you can do the same with putting in amounts and other line items. So FBB1 is really intended to be used for post foreign currency revaluation. However, it could be used to post a manual journal entry. So this would be one of those 60-plus standard transaction codes in SAP that could be used to post a manual journal entry that we would want to consider in our population. Just a couple of examples of transaction codes there. Moving on to the next, we show the document type configuration. Try to get the slide to advance here. Jamie, could you advance to the next slide for us?
It should be up.
Okay. So this is document type configuration. So here on the left, you can see the GL account and account types. The GL account box is selected, meaning that this document type could be utilized to post a manual journal entry. And on the right is batch input only. You note that this box is not ticked, which means that SA, in this case, the document type, could be utilized to post a manual journal entry. If this box was selected and remained that way for the entire period, then we could potentially exclude this document type from our population. So just showing where that sits, and the table supporting this configuration is table T003. Moving on to the next slide, it's GL account reconciliation. So here we've got two screenshots of SAP. On the left, we show the post-automatic only, and on the right, we show the reconciliation account. On the left, the post-automatic only, if that is selected, that means that this GL account could not be used to post a manual journal entry because it's restricted to only automated entries. So when a user tried to use that GL account to post a journal entry, they would not be able to do so. On the right, we show the reconciliation account. In this case, the account is not a reconciliation account, so it could accept manual journal entries. However, if this was set up as a reconciliation account, then it would not accept manual journal entries and would be an account that we could exclude from our population, again, considering if it stayed that way for the entire period. So then moving on to the next slide, we show user IDs. And this is the final fifth element. So here we show a chart of all the user types, A, B, C, S, and L. And then we have whether the user type is dialogue or non-dialogue. So dialogue means that it's a user ID that could be logged onto by an end user sitting at their computer. That means that B and C, being non-dialogue, could not be utilized to post a manual journal entry because an end user sitting at their computer could not log on to them. User types A, S, and L could be utilized potentially to post a manual journal entry. And you can see at the screenshot at the bottom of SAP, there's my user ID and it's type A, which means I could use my ID to post a manual journal entry if I wanted to. Again, these are point-in-time settings that require some analysis and procedures to be performed for the entire period on document type, the GL accounts, and the users to make sure that the settings are unchanged before you could really exclude them from your population. Now moving on to the next slide, we have a chart, and this chart is trying to illustrate where we go from all SAP accounting documents to our SAP manual journal entry population. So starting in the top left, we have all SAP accounting documents. Then we have the 5 elements. So we look at documents with business transaction equal to RFBU, and it could exclude any documents that have a business transaction other than RFBU. Then we look at the transaction code that is utilized to book the entry. And if it's one of the 60-plus or additional customized transaction codes, then it's a potential manual journal entry. Any other transaction code would be excluded from the population. Then there's document types that accept manual postings based on the configuration for the document type. If we determine that it's a document type that could not be utilized, then we would exclude it because it's marked for batch input only or has that account, doesn't have the account type set up for account type S. Then there's the GL account configuration where we have the automated post only and the reconciliation accounts. Those accounts we could exclude from the population. Then there's B or C type users that we could potentially exclude from the population, arriving at a population of SAP manual journal entries. So these are 5 elements that you could consider. I think every environment is a little bit different, and they do require some procedures to be performed to make sure that the settings haven't changed and would apply to your environment based on how you have it set up. So I think with that and walking through that detail, Jamie, we're going to pause for another CPE question.
Yes, thanks, David. And a big question to see how well everybody out there knows their SAP environment. So approximately how many manual journal entries per month are posted in your SAP environment today? Less than 1,000, 1,000 to 5,000, 5,000 to 10,000, 10,000 to 15,000, or greater than 15,000, or the last option, which is unknown. Again, just to remind everybody that if you're unable to answer the questions, please just submit the answer through the Q&A chat session in order to get your CPEs there. We had a great question come in, Jill, and it's great because it relates to a question we've been getting on the project that we're working on right now. And I'll ask the question to you. How are companies responding to the increased focus on manual journal entry approval, where they have configured users to create and post journal entries to facilitate a faster close? A leading practice on the faster close is to allow users to post their own journal entries.
Great. Yeah, that's a great question, Jamie, and certainly one we get a lot of. Specific to that scenario, what we would typically see is some more robust or developed back-end review controls over higher-risk journal entries that meet certain criteria, journal entries over a threshold, et cetera. And that's provided that the company has front-end controls in place that requires approvals for all journal entries booked into the system. And so we certainly do get that feedback from our client base that they're looking for flexibility and therefore they're leaving the system open to those create and post, and they choose a manual route for mitigation. Again, the controls on the front end, if they are manual, those are obviously human error prone, and so we need to make sure we have those backstop detective review controls in place to cover our key transaction streams that are being processed through manual journal entries.
Yeah. So just to add, my 2 cents on that, I think, companies still find the majority of their manual controls go through, and you should sort of workflow those and look at workflow to do them. Any that you're putting through to get a faster close, we accept that, but you should be able to isolate those and identify them and put those controls in place that Jill talked about on the back end, either by looking at different document types or things like that to perform that manual review. So great question, and thank you very much for that one. So what I'll do, I'll take a look at the results for this poll here. Again, it doesn't surprise me that the majority is unknown. I think, recognizing that it's quite difficult to actually get down to the answer of how many manual journal entries really do exist in your system. I mean, you can get a very easy idea of how many journal entries are coming through, but then there's the false positives between those that are actually system generated or coming in from one source or another that aren't actually sort of manual journal entries. So this doesn't surprise me that this is the answer here. But then moving on from that, it seems we've got an odd distribution where the majority are at the bottom end of the scale and then none in the middle, and it goes quite high to those that are over 15,000 a month, so quite a variety in the middle there. So with that, I think, David, we'll move on to the next slide.
Thanks, Jamie. So we've talked about the 5 elements. Now we're going to talk about some other exclusion considerations. So the 5 elements get you to a manual journal entry population. However, in your environment at your company, there can be other exclusion considerations that you need to look at before you really arrive at the manual journal entry population for your company. It's important to note that as we talk through this, the process and controls that support these other exclusions are key to the company, and they're being tested and ensure that they're effective from a design perspective as well as an operation perspective, because we want to make sure that what we're pointing to is operating effectively such that we can rely on that. So the first example here would be transactions with other mitigating controls operating at the correct level of precision. So this would be like FB60 non-PO invoices. FB60 is a transaction code that's in one of those 60-plus standard SAP transaction codes that could be used to post a manual journal entry. So it will be in that manual journal entry population after applying the 5 elements. It's very common that there are other controls and processes around transactions posted with FB60 for these non-PO invoices that exist. So if there are other controls that operate at the right level of precision and based on the way they operate would cover all FB60 transactions, then we could potentially point to those controls as covering this transaction stream and then exclude those from our manual journal entry population. Another consideration to look at that we've seen are transactions where additional procedures can be performed to make sure that it's a non-manual entry and could be excluded from our population. So a great example of this is FBB1. I think a few slides back we showed a couple of screenshots showing that FBB1 has very similar fields to FB01 and can be utilized to post a manual journal entry. However, this is a common transaction code that is utilized to post foreign currency revaluation, which does result in usually thousands and thousands of transactions being posted, accounting documents being posted into the environment. So if you can perform some additional procedures around that, that would be a good exclusion. So additional procedures could be to look at the FBB1 population, look at the GL accounts, the dollar amounts, ensure that the GL accounts that are booked to are in line with the configuration for where foreign currency revaluation should be posted to, and after some of those considerations, you may be able to exclude this FBB1 transaction stream from your manual journal entry population based on these additional procedures that you've performed to get comfortable with that transaction stream, such that you wouldn't need to look at them again in the manual journal entry population and a detective review control that may exist around manual journal entries. The last consideration we have here are validation rules or other customization. So you could use validation rules on GL accounts or document types to restrict the use of a GL account or a document type. And where those restrictions exist, they could certainly be tested for design and operating effectiveness, and then that stream excluded from the manual journal entry population as well. Again, we want to make sure that that is operating effectively and has really been in place the entire period that we're evaluating our manual journal entry population before excluding. But all of these are other considerations that you can look at when you're trying to evaluate and arrive at your manual journal entry population, in addition to the 5 common elements that we talked about that exist in your environment today. So now that we've talked about identifying manual journal entries and arriving at that population of manual journal entries, we're going to move to talking about control considerations that exist around this population of manual journal entries. So Jill's going to dive in a little bit on the next slide about that, talking about controls that may exist in your environment.
Thanks, David. I think the first thing to point out here is that rarely is there a one-size-fits-all approach to controlling manual journal entries in a given environment. Each environment is customized differently. There's different security provisions. There's different configuration and how doc types work through the system. And so you really have to build a customized control solution to your given environment, taking into account some of the elements and considerations we've talked through today. Typically, we see a combination of these types of controls that work together to mitigate the risk of management override, as well as the financial reporting risk associated with journal entries. To spend a bit of time on what's listed here, the first one is around manual approval of journal entries prior to posting. So this would be a manual prevent control whereby all journal entries require support and approval for appropriateness prior to actually entering those into the system. In order for this to be a complete control solution, the leading practice would be to couple this with the control below it around the periodic review of manual journal entries. Because what that's going to do is pick up anything that the manual control may have missed on the front end. If I'm looking to put an entry into the books, I'm not necessarily going to follow the company policy and walk that down to get support and approval when I have the ability to post that directly into the environment. And so a back-end detective control would help us to identify those and make sure that indeed we have support and approval that's separate from the person who entered that particular entry into the system. Another specific control we see is more around continuous monitoring, and we've got an example a little bit later on to bring this one to light, but where we leverage a targeted review of journal entries. And so those may be things like unique account combinations, thresholds, etc. And then we move more into our automated world, where we've touched a little bit on the ability to post accounting documents, so making sure that that's restricted in the environment and potentially leveraging a GRC tool to continuously monitor that. If we are in an environment where we do have workflow enabled for some of our manual journal entry transaction stream, we'd want to take credit for that through the automated control that provides that segregation between creating and posting. And we may also have things that are unique to an SAP environment, custom validation rules that we've built, or additional customization. These may be things around GL account validation and combination rules, or using authorization groups in SAP to protect certain document types from posting, etc. If we move on to the next slide, we can see kind of the spectrum of manual to automated, preventive to detective controls, and what that looks like from an effort to operate perspective across that top line. And so certainly our manual controls take more time to operate. Someone's got to go find that manual support or pull a population from the system and tick and tie documents, whereas when we go to a more automated solution that's based upon workflow configuration and security, that is a lower cost to operate once we get that set up in the system. Now the line below talks a little bit more about complexity to implement, and certainly those automated solutions do come with a higher price tag on the front end to get them implemented, but then it saves time down the road in terms of control operation. Also, when we move from a manual to an automated environment, our risk of error and fraud moves down the spectrum from high to low because we don't have that manual intervention or that human error component associated with our control design. The last thing to point out here around the other comments is specific to the automated preventive control solution around workflow. And Jamie alluded to this earlier. We usually do see workflow-enabled in environments which leaves an exception stream open for those fast close type emergency entries, the things that need to get into the system so that we can get our books closed. That is certainly understandable, and if that is a route the company chooses to use workflow for the bulk of transactions and then an exception stream for those late entries or emergency entries, then the leading practice there would be to just make sure that we have some back-end review controls in place to control that exception stream and make sure that indeed there is support and approval for the appropriateness of those entries. Moving on to the next slide, we'll talk a little bit about SAP Park and Post with workflow. And so as we've mentioned previously, this particular functionality does provide that segregation between the creator and the poster in the environment. For those of you who have had legacy versions of SAP, you're aware that there were challenges with the old Park and Post functionality. There was the ability out there to circumvent the approval process because a user wasn't required to park a document. That was just an option for them to park, and then to have somebody go out there to the parked documents list and grab it and post it. Changes could also be made to park documents prior to posting. So even if David parked an entry, when I went in to post it as his manager, I could change amount, account, the financially relevant fields prior to posting. So now, in ECC 5, 6, and beyond, we've got this new Park and Post workflow functionality. And what it delivers is automatic workflow initiation through the use of triggering events in SAP. So that is the event that initiates the workflow in the environment. Provided we have the appropriate security restrictions in place and we take away that ability to directly post, the workflow can't be circumvented with this new functionality. We can't make changes to the park docs prior to posting. In my example, if there's something from an amount or an account perspective that I want to change on David's entry, I would have to route it back to him for those changes to be made, and then it would come back to me for reapproval. If we use the standard delivered SAP workflow, those documents will be posted with WF batch from an ID perspective. So that allows us to do some analytics and some monitoring over that transaction stream if we want to look at that from a workflow perspective. And workflow does also allow for that exception transaction stream, as we talked about a bit earlier. So with that, we're going to go to our final polling question. Jamie?
Great. Thanks, Jill. So the last question, last polling question, what is or what are your company's current key controls as it relates to manual journal entries? Option 1, manually approved outside of SAP, so manual approval of journal entries prior to posting. Number 2, periodic review of manual journal entries. Option 3 is both 1 and 2. Option 4 is workflow, 5 other, or 6 no controls. And again, if you can't answer, please do just submit your answer as part of the Q&A chat. So whilst we're letting people look at that, Jill, a couple of questions that have come in. One, this first one relates a little bit back to some of the stuff we were talking about earlier. How do we get a historical view to confirm that these settings that you just showed have not changed over the audit period? So this was just prior to the last polling question.
Yeah, that's a great question, and there's a couple ways to go at that. The first would be specific to the configuration settings, to take a look at the change logs for those particular configuration settings to ensure that those particular user type or doc types that we discussed haven't changed. And then on the master data side for the GL accounts, there's a standard delivered edit report out there that could be looked at to check for changes to reconciliation accounts, the auto post only flag, etc. So that's one way to actually go directly into SAP and look at that. The other way that we've seen a lot of clients moving towards is to leverage the GRC technology, and we're going to touch on that on the next slide here, to actually build some continuous monitoring rules to be alerted when changes are made to these elements.
Great. And then another quick question. Is workflow the only way to segregate the park and post function?
From a standard delivered perspective in SAP, yes, Jamie. Of course, there's always the customization route that could be gone, that could be taken to customized configuration and security in the environment to separate that as well. But in terms of standard delivered configuration, workflow is the only way.
Great, thanks. And with that, I'll use that to segue on to the results of this last poll. It shows that most people are using both a combination of manual approval and the periodic review of journal entries, which I think is consistent with what we typically see across clients. Workflow, it's nice to see that being up at 18% because we really are seeing a lot of people, particularly with the pressures of the PCAOB and what audit firms are putting on companies right now, moving to the workflow solution, and simply because it does offer a better protection, better control over those journal entries. And so with that, I think, David, you're going to take us through to the end.
Yep, thanks, Jamie. So on the next slide, we'll talk about how to leverage GRC in a manual journal entry process. So looking at the access solutions as well as some of the process solutions. So from an access side, you could use a product to monitor users with the ability to post accounting documents and ensure that those users are appropriate users to actually have that access, to make sure that you don't have people that shouldn't have the access with the ability to post accounting documents. The other thing that can be done is to perform a sensitive access check when provisioning. So as user requests are coming in, use a sensitive access check to see when a user requests access to post accounting documents. It would be triggered as a sensitive access, and approval would be required to make sure that this person, in fact, is required and okay to have the ability to post accounting documents, to help ensure that overall the right people in our environment have the ability to post accounting documents, and we don't have people that should not have this access with that ability. Overall, a great way to use a GRC product to help manage the access side of things. Then on the process side, as Jill talked about, we could use a GRC product to monitor document type configuration. So you could look at table T003 and set up some notifications such that when a modification to the flag for batch input only or account type S was made, a notification was made, and have some real-time monitoring of that configuration on a regular basis, such that you didn't rely on period-end reports or looking at change logs like Jill had mentioned to identify changes, and you would be notified immediately when things like this changed. Could also be used on the GL account settings in table SKB1, where we talked about the reconciliation account and the automatic post-only flag sits for the GL accounts to make sure that if those the changes are appropriate, and we adjust our process of generating a manual journal entry population based on these changes that occur. Could also use it to monitor modifications to user types. If, for example, a user type B is changed to be an A dialog user for some reason and then back to B, we would then know about that when it happened and receive some notifications about it to make sure that it was appropriate. And again, we adjust how we generate our manual journal entry population based on the changes that are occurring. Then the last two really relate to some technology from SAP that's coming out. So with HANA, it could use a GRC product to generate your manual journal entry population for you, really help automate the control and the manual review of journal entries at period end by having the report automatically generated and sent out. Would definitely be a great way to make the process less manual. Second one there is with SAP's fraud management solution. So you could use fraud management to monitor trends of journal entries by geographic location and really keep an eye on journal entries in the environment and overall count as well as other criteria that you wanted to set up to keep an overall perspective on how journal entries are trending in your specific environment. So those are some GRC access and process solutions that could be utilized. On the next couple of slides, we have a couple of examples. The first example would be for higher risk journals, and this would be monitoring journals as they are recorded. So some risk factors could be set up, and based on settings of large journal entries or unusual account combinations like we've talked about, P&L impact, and some of the other ones listed here, notifications could be sent out to automatically notify when these entries are being recorded such that follow-up could take place as needed. This will allow central oversight of journal entry transactions for a global business, and exception-based reporting really can reduce the time that the business has to operate because this will be done on a real-time basis. So then at period end, you won't have as many journals to review, and you can tackle them as they occur. So again, they'll be very timely from that perspective. Then moving on to example 2 here, from a potential solution goes back to a little bit on the GRC considerations where you could automate the generation of a report that is utilized as a part of a manual control so that users doing a review, for example, of journal entries at period end would receive the report in their inbox. Workflow notifications could be utilized to operate the review and ensure that it's taken place, as well as actions taken and follow-up related to that report and operation of that control could be stored in a continuous monitoring tool, making it very easy for external auditors or other people that need to follow up to go in and look at the evidence. So then we'll go to the key takeaways and just wanted to kind of step back and run through things we've learned today. So overall, companies should demonstrate that they have controls around journal entries and identify a full population of manual journal entries. There are certainly several elements to be considered. We talked through 5 elements today, as well as some additional considerations that you should look at. Really want to understand what the manual journal entry population is in your environment and the controls you have to address it. The controls over manual journal entries, including completeness, require the continuous monitoring, and you have to look at the settings, and if they're changing, adjust it accordingly. Then Jill talked about park and post workflow and the benefits there. And we talked about some GRC solutions and a couple of examples of how GRC could be leveraged in a journal entry environment. I think overall, just remember every environment is a little bit different, and these are considerations we presented today that you could look at in your environment to help make a great journal entry process. So I think that's all we had. Jamie, I don't know if we have time for a question or two before we wrap up.
Yeah, I'm just going to cover one question and then close. So we had a question come in that says, can workflow be turned on after implementation of ECC 6? And if so, what are the challenges? So I'll take the very easy component of that. Yes, it can be turned on, and I'll let Jill talk a little bit about some of the challenges, and then I'll add some as well.
Yeah, Jamie, thanks. I think the most important piece of a situation where you would implement workflow after you already went live is the analysis of the journal entry data in your existing system. So in some cases, there's some benefit to have some historical data in your system to do some data mining over to determine what's actually being leveraged in the system and what's provisioned to post manual journal entries, because that's how you have to build your triggering events in terms of making sure that all of your relevant transaction streams actually go through workflow.
Great, thanks. I think, the other thing is obviously organizationally, you need to make sure you know who's going to be approving what journal entries within there. So with that, we'll wrap up and close for today. So thank you, everybody, for joining. As a last reminder, at the bottom of the screen, there's the widgets button that you can click on to download the slides for today. Also, if you want to go to the CPE, you need to complete the CPE widget. I think we've just jumped to the last slide, but before we get there and sign off, the next webcast that we've got coming up is going to be on January the 28th. We will be sending out a note to everybody who participated in the webcast with that information on it. And the topic for that webcast is aligning GRC with the revised COSO internal control framework. So I think very, very connected to this topic. Because, this is something that we're seeing the PCAOB push and the audit firms, including ourselves, push. And then obviously, the COSO framework, the new COSO framework's come out, and, that seems to be spreading across boardrooms as people look at how, what do those changes mean to us, and what do we need to do to comply with the new framework. So hopefully that'll be of interest to everybody out there. And with that, I'll say thank you very much for joining, and hope to talk to you all soon.